Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, making professional trading simple. And I'll tell you, I tried to get bullish, guys. I did. I really wanted to. The patterns seemed to be setting up pretty well, but you know, the charts just would not allow me. They would not allow me to get bullish quite yet. Neutral to bearish, and this is why news comes out today. It's bad, bad, bad. Markets don't just gap down, they sell off. Sell off most of the day after a little pop in the morning, but sold off most of the day, really. And you can see winding our way back down again. So, is this the next start of the next big move? Well, it certainly could be. We did break some lower levels down in here. I'm going to do some work on this over the weekend. Got a very busy weekend. My oldest son is graduating from high school, so congratulations to my boy Ryan. And we are having a party for him here in about an hour or so. So I will do more work this weekend on the charts and see where we are. But here you have the Dow. Look, just bleeding downwards. Got back below 10,000 and closed below 10,000. Wasn't even really much of a fight of it really towards the end there. The bulls just not even trying. Look at the big red candle coming right back down to where? 9,900 was that level. Remember? Talked to you about that right around that 9,900 level. Low of the day. 98.89. Yes, that's right. About 10, 11 points from where we had been watching for the major. The major support is down here. We break this, guys, and yeah, it could be off to the races for the Bears, quite honestly. And the 200 holding well. Boy, they needed those. The Bulls needed those numbers to be good today so that they could gap up and above all this stuff as opposed to going down. Couldn't make it happen. This is why we have to read what the charts tell us. I wanted to get bullish. I couldn't allow myself to do it. Neutral to bearish, still neutral to bearish on this market coming into the weekend and into early next week. I have to remain that way because the charts tell me to. Not my bias. Got to leave my bias out of it. NDX on a 60-minute, you can see it doing the same thing, gapping down and pouring over. Now, this was my caveat. This was the one that yesterday got back above that blue line. For those of you that have been following me, you know I like to see it close twice above a certain area. And I always give the other side, one last chance to kind of make a difference. And the Bulls couldn't hold it. They just couldn't do it today. They weren't even close. I mean, it did, I guess, try to come back up to that area, but they didn't make a real concerted effort to save anything. So here we go again. No reason to think now that once we break this 200, since everything else has broken the 200, that we can't see some lower prices ahead. This might be a situation where the SPX and the Dow go down lower and the NASDAQ comes down to meet these lower lines down here, which is where the Dow and the SPX are already at. So they break their lower ones. The NASDAQ remains stronger by only coming down to here, but only coming down to here really honestly wipes out everything the NASDAQ gained since February. From a weekly standpoint, we can now look at the candle, and this is why, after going into Thursday, looked like it was trying to bounce. Looked like it really wanted to do it, and then no, not today. So after the gap down today, runs down and finishes right at where? Yeah, this heavy, heavy support line. So that'll be something we'll be watching coming into the weekend. SPX on a 60-minute. You can see the bleed here. If you are an Elliotician, I'll tell you, this looked like a pretty good, I suppose this could have been a 1, 2, 3, 4, 5 up with a 1, 2, 3 down. Now looking for some sort of a 1, 2, maybe 3, 4, 5 up. It was there. But you can't use Elliott Wave as indication. You can only use it as confirmation if you want to have any kind of decent trading to go off of in a more consistent way. It didn't work out that way. I'm sure there's alternate counts that have it pointing downwards. Obviously, that's where we went today. So this must have been potentially now a wave C that finished up in this area. Now we could be headed down. It's still anyone's call, though, guys. I'm telling you, I'm not jumping on board yet, but I will, and have to remain bearish coming into early next week. There's just no question after looking at the charts. SPX diving, 200 held really, really, really nicely here. So we're watching these lower levels as we push forward into next week. SPX on a weekly, you can see, is now what? Yeah, it's closed below the 50-week moving average. That is not good. So now I'm going to give the Bulls 1 week to bring it back up again, but a couple of closes below there. and it could be all over for the Bulls for a while. VIX on a daily was also up today, a whopping 20%, 10% for the week, I guess, as it would be. So still up here in the red zone, you can see fear remains in the markets, and tried to subside earlier in the week. Not today. Not with the numbers we got today. Those are really bad numbers. They rode on it, or the Bears went ahead and just rode on that, took it downwards, and it is what it is. And here we are, right back in the middle of this chop when it comes to fear in the markets. Apple on a 60-minute, man, could not do the 265, but look where we came to, back down to the blue line and or the 200. So it really didn't break below the lines I was looking for it to do. Not in any great moves. You can see it holding here above this blue line. So it's maybe still some hope here for Apple, but got to watch this very carefully coming into early next week. Here's the 20, here's the 50, here's the blue line. It has a lot of support below it. Just a matter of will the markets allow it to move back up again. Apple on a weekly did hold the blue line. You got to give it credit, but that is not strong. It's not strong. It's got to get its way back up here again. But Apple could be in for a tumble once and if it breaks this blue line. That's going to be my mark. Now, it might take a few weeks. I'm not saying that as soon as it breaks the blue line, it's going to crash back to 90 or something like that. I'm just saying that once it breaks this blue line, I'm going to give Apple just a few weeks. If not that week, I'm going to give it only a few weeks to really get underway. FAS on a 60-minute also finding its way down today, back into that 21 area. Like I said, hard to be a swing trader with this stock, but pretty easy to be a day trader. One of my students wrote me today and did very well on a trade. By the way, Mark, if you're watching, man, that was nicely done. You had it picked perfectly, played it very nicely. Entry was right on. Your target was right on. So nicely done. On both. He likes to play FAS and FAZ, so I'm not sure which one he played today. I think it was FAZ, but anyway, regardless, they're all the same. Had a very nice play on him. Once again, point being, play him intraday. Still play him intraday. You get breaks below here though, whoa Nelly, watch out to the downside. FAZ on a 60-minute. Come on, Smiley. Here we are, moving its way up. You can see it once we broke above the $16 level. It was off to the races, $16.53. A very, wow, very logical place to run to, actually. That makes total sense to me. So a very nice push by the Bulls today. Once we got above 16, would have made for, like I said, some good intraday trading, but not good swing trading. We are choppy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11 sessions. And we're right back to about where we were after 11 sessions. It's straight across. So for you swing traders, let it get above here. It gets above the 200. Now you've got something to talk about. Now maybe we're holding overnight for a while. Otherwise, below 14. We'll talk more about it this weekend, and that'll wrap it up for this week. Okay, if you followed along with me, I mean, there was opportunities to think bullish, but I couldn't let the charts tell me to get bullish. They didn't break the areas I needed them to break to change my mind about the fact that we're still in a bear move. We're still in a bear move, and you can decide that it's going to bounce here all you want, but the market does not care about your bias. It's not going to listen to you. I've tried it before. It doesn't work. You can yell at the screen all you want, but you can't make the markets do what you want them to do. I used to do that. So, if you followed along this week, I hope you were at least able to keep things in perspective from the standpoint of where we closed and not getting too bullish when things looked like, oh, here it is, here's the bounce. This is exactly why you have to let the charts tell you what to do. All right, so you guys have a great weekend. I know I'm going to. I'll be back with you again on Sunday. And let me get some time here to look at the charts, see where we might go next week. But I'm telling you right now, it's still a lot of chop. But I'm still neutral to bearish right here. All right, guys. Talk to you on Sunday. Have a great weekend.